This isn't just about real estate. It's about turning passive income into a compounding machine. Let's break down why this move is smart for 2025. REITs aren't just fancy tricks. They're the easiest way to invest in property without being a landlord. You're owning a slice of shopping malls, data centers, or hospitals. These companies must pay out 90% of profits as dividends. If they make money, you make money. It's passive income on autopilot. After recent chaos, rate hikes, and market volatility, REITs took a hit, but rents and leases remained strong, keeping cash flow steady. In 2025, we see attractive entry points for REITs. While prices recover, yields are sky high. It's like buying the golden goose on sale. REITs love inflation. Rents rise with inflation, and many have contracts that increase lease payments every year. While inflation erodes cash in the bank, REIT income can grow. With tax perks, they are worth your attention. That $100,000 could earn you over $5,000 annually, plus long-term capital gains if you stay in the game. Let's explore the first REIT outperforming expectations and building cash flow. Realty Income, ticker symbol O. The monthly dividend company pays a dividend every month over 50 years of uninterrupted payments. Realty Income's portfolio consists of over 13,000 properties, mostly single-tenant retail locations like Walgreens and 7-Eleven. These are cash flow tanks under long-term leases. Even if one tenant bounces, the machine keeps running. With triple net leases, tenants handle maintenance, taxes, and insurance. Realty Income just collects rent. At current prices, O yields around 5.6%, providing monthly payments like a tiny paycheck. They've increased their dividend 122 times since going public, compounding your investment into a rising income stream. If you had bought O in the early 2000s and just let it ride, you'd be sitting on a mountain of dividend income and capital appreciation by now. This is the kind of REIT people hold for decades, not months. It's built for weathering storms and still showing up every month like clockwork. Let's talk about Prologis, ticker PLD, the king of warehouses, the emperor of e-commerce infrastructure. Have you ever clicked Buy Now on Amazon and got your package in 24 hours? There's a decent chance it spent time in a Prologis warehouse. This company owns and operates over 1 billion square feet of logistics space across 19 countries. This REIT is what happens when real estate meets technology. It rents out the backbone of modern retail. Amazon, FedEx, UPS, Home Depot, even Tesla. These companies are Prologis tenants. In a world of next-day delivery, Prologis is literally part of the supply chain. That's essential. Over the past decade, Prologis has delivered annualized total returns around 15%, fueled by rising rents and smart acquisitions. Prologis boasts one of the highest occupancy rates in the industry, above 97%, with leases renegotiated upward. Although its dividend yield is about 2.7%, the payout grows quickly with double-digit increases. If you reinvest those dividends, Prologis turns into a rocket ship, perfect for those playing the long game. As the world leans more into automation, Prologis becomes even more valuable. This REIT is built for today's economy and the future. Realty Income is the rock, and Prologis is the future-forward machine. Our final pick is the stealth wealth play, public storage. Public storage is the quiet overachiever of the REIT world. behind its massive buildings lies a highly profitable business model. They dominate the self-storage sector with over 2,900 facilities across the U.S., offering about 200 million square feet of rentable space. This business has low operating costs, mostly maintenance and security. Clean, dry spaces that people pay premium prices for. Self-storage demand jumps as housing prices rise and people downsize. Life transitions like moving and retirements add fuel to this growing business. Public storage flourishes during economic uncertainty with flexible pricing, allowing them to adjust rents more frequently than traditional landlords. With a 4.2% dividend yield, PSA has a solid track record of paying and growing its payouts, making it a dependable choice. While it's less flashy than Prologis or Realty Income, PSA is dependable and excels in generating consistent income. Combining PSA with other REITs creates a diversified income portfolio. Retail, logistics, and storage for comprehensive cash flow and growth. How do you build the perfect portfolio that actually works for the long run? One that pays you and grows with you. Start with your foundation. You want income, right? So lock down something reliable. Enter SCHD, the Schwab U.S. Dividend Equity ETF. It tracks quality U.S. companies with a long history of paying dividends. With SCHD, you're aiming for consistent income year after year. Let's say you park $40,000 here. That's 40% of your portfolio. This investment earns you roughly 3.5 to 4% annually in dividends. Hello, cash flow. You want global exposure too. Don't tie your future to one country's mood swings. So toss $30,000 into VXUS, the Vanguard Total International Stock ETF. This gives you access to stocks from Europe, Asia, emerging markets, and more. Instantly diversified without learning a single foreign language. Plus, it comes with a little dividend on the side and long-term growth potential. For growth, put $30,000 into QQM, the mini version of QQQ, tracking the NASDAQ 100. We're talking Apple, Microsoft, Nvidia, all the tech darlings. It's a bit more volatile, but it's got serious horsepower. Altogether, this trio, SCHD, VXUS, and QQQM, gives you balance, income, global diversification, and growth. Your 100K portfolio is live. SCHD is handing you dividend checks. VXUS is exploring the world on your behalf. And QQQM is aiming for the stars. The real magic is in reinvesting. By taking the money your portfolio gives you and putting it back in, you can turbocharge your growth. Look at SCHD throwing off 3.8% in dividends each year, which is $1,520 on a 40K position. Don't let that money sit idle. Instead of spending it on a getaway, reinvest that cash back into more SCHD. It's like giving your portfolio a raise every year. That reinvested dividend boosts your next payout, adding more shares and increasing your wealth-building momentum effortlessly. Now, stretch that across VXUS and QQQM. VXUS might drop you a modest dividend, maybe 2%, but reinvested globally, that money starts compounding across borders. QQM. It's not big on dividends, but any capital gains you make from its growth, reinvest them. Take profits when the time's right. Feed the profits right back in. It's how you go from just having investments to building serious multi-decade wealth. This is compound interest in action. It's not flashy at first. It won't make you rich overnight. But over time, it's a snowball. One reinvested dividend turns into 2, then 4. Then it's funding your vacations without touching your principal. Investing $100K is powerful, but reinvesting what that $100K generates, that's how the rich get richer. Set it, forget it, and let time do the heavy lifting. You started with a simple idea. Make your $100,000 actually work for you, not just sit around in a savings account. We broke it down into 3 powerhouse ETFs: SCHD, VXUS, and QQQM. Each offers unique advantages. One provides rock-solid dividends. Another exposes you to global opportunities. And the third drives you into future tech. We discussed strategy, how to allocate, ride the ups and downs, and most importantly, how to reinvest. Most people overcomplicate investing, but now you have a simple, smart, and scalable portfolio. It adapts, grows, and doesn't require constant monitoring. Just set it and let it build wealth silently. If this video gave you clarity, if it sparked a shift in how you see your money, don't let it stop here. Like this video, subscribe for more no-fluff investing advice, and share it with that friend who's still letting their cash rot in a savings account. If you want us to break down other portfolios, retirement strategies, or go deeper into dividend investing, drop your requests in the comments. This isn't just about making money, it's about building a life you don't need to escape from. Simple strategy, smart execution, strong results. Let your money hustle so you don't have to.